Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden meanings behind important company announcements. And today we've got a juicy one from Customers Bancorp Incorporated. Get ready because this filing is all about a significant financial maneuver that could really shake things up for investors. Before we dive in, if you are new here and love getting the real story behind corporate filings without the jargon, make sure you hit that subscribe button. And hey, we've got a fantastic community over on our Discord server where we break down these filings even further. So definitely check out the link in the description below. Alright, so Customers Bancorp Incorporated, a company you might know from its stock trading under the ticker QB on the New York Stock Exchange, has just issued a report that tells a pretty interesting story. It is a current report filed on Form 8K, which means something important happened, and they needed to let everyone know right away. The key date here is the 30th of October 2025. On this day, Customers Bancorp announced a decision that will essentially wrap up one of their financial products. What they've decided to do is redeem all of their Series F preferred stock. Now, what does that mean in plain English? Think of this Series F preferred stock as a specific type of investment they previously offered. Kind of like a special kind of loan or a stake in the company that pays a fixed rate. They've announced they are calling it all back or redeeming it on the 15th of December 2025. The real takeaway here is that after the 15th of December 2025, there will be absolutely zero shares of this Series F preferred stock left in circulation. They are completely getting rid of it. This is a pretty big deal because it signals a strategic shift for the company, or perhaps a move to simplify their financial structure and reduce future interest payments. Now, this doesn't affect their main common stock, the QB shares that most people trade. Those will continue to be traded on the New York Stock Exchange just as they are. They're also talking about their Series F preferred stock, which is a bit of a mouthful, but it basically means it was a type of stock that paid dividends, and those dividends could change over time from fixed to floating. The fact that they are redeeming all of it suggests they are no longer finding this particular financial instrument beneficial, or they have a better use for that money. You might also notice they have other things like subordinated notes, which are essentially a form of debt. While they are mentioning these, the main action in this report is the complete redemption of that Series F preferred stock. So why would a company do this? Well, it often comes down to financial strategy. They might be looking to cleaner up their balance sheet, meaning they want to make their financial statements look simpler and perhaps stronger. Another big reason could be cost savings if they can refinance this debt or preferred stock at a lower interest rate somewhere else, or if they simply have excess cash and want to return it to shareholders or pay down other debts, redeeming this stock makes sense. It also removes any future obligations related to those preferred dividends. Think about it like this. If you had a credit card with a really high interest rate and you got approved for a new credit card with a much lower rate, you'd probably transfer your balance. Customers Bancorp might be doing something similar, settling their obligations with this Series F preferred stock. The report also mentions that a press release dated the 30th of October 2025 is attached as Exhibit 99.1. This press release is where all the official details about this redemption would have been announced to the public. It essentially contains the information we are decoding here, but likely in a more formal format. And to wrap things up, the report is signed by Andrew B. Sachs, who holds the important title of Executive Vice President, General Counsel, and Corporate Secretary. This is the standard closing for these kinds of filings, confirming that the company is officially reporting this significant event. Now, let's look at this from a Warren Buffett perspective. What is the story here? Customers Bancorp is demonstrating a proactive approach to managing its capital structure. By redeeming its Series F preferred stock, the company is likely aiming to reduce its financial complexity and potentially lower its cost of capital. This move suggests confidence in its future cash flows, as it wouldn't undertake such a significant redemption without a solid plan to cover the costs and a belief that the capital could be better utilized elsewhere. However, it is also important to consider the flip side. Why did they issue this Series F preferred stock in the first place? What were the terms and what does the redemption imply about the previous issuance? Sometimes, these redemptions happen because the terms of the original security were not as favorable in the long run, or perhaps market conditions have changed dramatically. While on the surface, this looks like a positive step towards financial efficiency, investors should always dig a little deeper to understand the full context and the potential impact on future earnings and dividend policies. Our assessment of Customers Bancorp's direction based on this filing is cautiously optimistic. The decision to streamline its financial obligations is a good sign of management's focus on efficiency. A notable risk, however, could be what opportunities this capital redemption creates or eliminates. If this preferred stock was a crucial part of their long-term growth funding, its elimination might signal a change in their expansion strategy. But then again, if it was just an expensive way to raise a bit of cash, then getting rid of it is a clear win. In conclusion, Customers Bancorp is making a significant move to simplify its financial commitments by redeeming its Series F preferred stock. This action points towards financial discipline and potential cost savings. While it appears to be a positive step, its true long-term impact will depend on how the company reallocates the freed up capital and whether this move aligns with their broader strategic objectives. Alright, that is our breakdown of Customers Bancorp's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps. And subscribe for more decoding of corporate documents. Don't forget to check out our Discord in the description for even deeper dives. Thanks for watching. See you next time.